Can you guys see? Is that recording? All right. Yep. Recording. Cool. 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 Yeah. So, like as usual, I'm gonna give everybody 5 minutes to get here, and until then, we can talk about like what anyone have any good or any really good, any really bad trades today? What it is or yours is? No, mine's fine, right? What's up, Jacob? Let's move this up. That's really annoying. Okay. That's just Tom's excuse. He's got bedhead and he didn't want to go shower, shampoo, and get it all fixed and nice. Yeah. So any really good, any really bad trades that we should go over at the end of everything? Anyone want to pick a stock to go over at the end of the webinar, like when we're doing the Q&A? You guys just throw out any tickers that you wanna go over, and like or potential for tomorrow or next week. All right, ERS will go over for sure. Yeah, that was a good one. I didn't trade that one at all today. I'm kind of hoping for tomorrow on that. That tends to be what I like to do. Is I like to like the movers that kind of just like get up there in the middle of the day. They just keep grinding up. It's like I cheer them on all day. Like I want them to gap up, go higher. Ideally, we get like the day two short, which is the really good ones in my opinion. Nice. So you longed it. Always nice to see longs in this room. You know, like I don't think there's enough of us. I don't think there's enough of us longs in the room here. Too many, in my opinion. Fucking Joe. There's like 5 longs in here, and that's too much. All right. Well, part of what I'm going to go over is like, no, it's going to be all short bias stuff today, for sure. We're cosmic, dude. LCI was, dude. I told like I was a victim. I totally forgot about LCI. Like I totally forgot about it. It's like it just it was so quiet and the hot chicks distracted me and and I saw it today and I was like, oh boom. Gentile, you mean his long order algo. his his bid. Excited for the borrow topic? Yeah, that should be a good one. We'll talk about that. Oh, yeah, EROS was a good one. We'll go over that one. What was another? There was another good one. Well, SBI is kind of creeping. I mean, I'm kind of hoping we get some more action on that next week. I mean, it didn't necessarily die. It all depends on if we get a new runner, probably not. If we get a new runner tomorrow, probably like it just fades off. But step one, get the borrow, wake up early. If no borrow, go long. Yeah, that's my strategy. If no, I mean, just if I can't go one way, you got to go the other, right? Yeah, right. He actually did that, and then he went overboard and paid the price. Yeah, we can go over my SBI trade. Did I even include SBI? I I don't even know if it's in my webinar. Like I'm just thinking about it now. I can't remember if it is. Well, anyway, we'll go over it. I mean, my trade sucked on it. Yeah, I hope it, dude. Like my short-term memory loss is crazy. Like I just made this webinar today. Gee, that's so bad. Like hours ago, I made this, and I can't remember what's in here. But we'll go over it. But I mean, mine sucked. But we go over like, actually, it was an okay long or trade. It was okay. I could have done a lot better. I wasn't green on it, so that's why I felt like it sucked. All right, give everybody one more minute. I'll let everybody know we're starting now, and then we'll start. All right, guys. All right, let's get rid of that. Darth Maul looks so sick. Um, and that's it. All right. So today we're going to be talking about the first resistance, right? So the first resistance short. Hey, what's up, Nick? The first resistance short is the first setup I ever learned, right? It was the first setup that I ever was like, oh, that's why, right? And so I remember I gathered actually on my laptop, which I no longer have. Like I was really annoyed. My first laptop I ever got, I was in college, and that laptop broke, and it had all of my saved charts. So that's really annoying. I didn't have all of my old ones. But yeah, it's a setup that I gathered all of my charts on. It was the very first setup I ever learned, and I'm excited to kind of talk. We were gonna talk about it last week, but then SINT stuff happened, and I'm like, okay, we have to talk about this stuff. What's up, Sam? All right, so first resistance, we'll get to it. So today we're going to talk about the key traders of the week. For those of you, this is your first webinar. I always go over the key traders of the week in this webinar. I like to talk about the market sentiment. That kind of gives me not a direction of my trades, but it helps prepare me to maybe be more cautious on the long side or more aggressive on the short side, or either or coming into the next week. So I like to talk about market sentiment. I throw in some large cap stuff too. We're going to talk about there's a different trader topic or two that I talk about every single week, depending on what's hot and what's not in the chat room. And then weekly, I change like the fun segment. Sometimes I talk about strategies, which we're going to talk about tonight, the first resistance short. And other times we talk about psychology, and those are actually my favorite ones. Other times we get into like executions and good stuff. But today it's the first resistance, and then we're gonna end the webinar with a Q&A. And TomDisel, our newest moderator, is going to be our guest speaker. So Tom, get your mic ready. All right, Joe. And yeah, so let's go. So okay, works first. So yeah, I actually kind of had a slow week in small cap land. Like we had some business, but like I mainly did a lot of large cap trades this week, mostly scalps. But anyway, so this was a very easy trade for me. I did this trade when I was kind of doing other stuff. Like I wasn't even really monitoring this trade. Like this was one of the, like, it's always fun when you can trade kind of robotically. Like I was in and out of my seat when I was doing this. Just like I was going, I had some other stuff to do, so I could go make breakfast, put this on, right? It could be very robotic about this kind of trade. And this is because it's a trend trade. I know exactly where my stop, I had a hard stop in this trade. I know exactly where I should put my stop. I know exactly where I should put my ads, and I know exactly where I should get my covers depending on what ads I get, right? So these are my favorite kinds of trades, the robotic ones. And the reason why this one was easy is because there's a very short and strict criteria for how I trade these, right? This was a trend trade, right? And so all day, like as you'll see, you've heard me talk about before in another webinar, if you've watched them. I know Cody took notes on this. If a stock chart is respecting its trend, typically that means it's going to respect the trend break, because when the trend breaks, everyone who's trading it is now assuming that it's trading per trend. So when the trend breaks, everyone behaves in a way that says, oh, it was following the trend, now it's not following the trend, so it should go the other way. So this was trending all day, higher lows, just grinding. No real pullback until here, right? This was kind of like, if you guys know my confirmation versus anticipation video, for A through W, all you're doing is watching the stock waiting. A through W is waiting. X marks the time you start paying attention. Y is the trigger, or sorry, A through W is set up. X marks the time where you start paying attention. Y is the trigger, and Z is the outcome, right? That's kind of how I like to treat my stock trade, right? So all of this was A through W. When we get the first pull here, this is the hardest pull we saw all day, like pretty violent. This was like the blood in the water that Alex likes to say. All right, this kind of turned me on to the idea that maybe the trend is slowing down. We get a lower high here, and then we get our first lower low. Right now, this trade is now active for me, and I can enter whenever the F I want. Right, so this is how I'm looking at this trade. As of right here, when we break this lower low, I'm thinking the trend is over. My trade is active. I can put on a short right here if I wanted to. I could short this right here because my thesis is now validated. My trend is broken. I can short it, right? So depending on how, a lot of times you'll see me if it's like a small cap piggy that's been trending all day and it's like 2 p.m. crack, I'm really getting in right here. But on a large cap stock, I'm always a little bit more conservative. I wait for the pops that I know are going to come if I'm patient. So right here, my trade is valid, but I wait for a pop. I think I can get a better entry, right? So now it's basically, I have a risk on this 2740. It's so easy of a risk to have because we have a double top here and we just made a lower low. The trend is supposedly broken. All in here, I'm looking to get short, right? But what happens to me here is right here is when the crude news came on, and I was like, oh, of course. If the large cap news and the SPY immediately ripped right here. So I kind of gave that a little consideration, and normally I would have had ads up in here, right? I would have been adding all the way up. But what I did was, because there was macro news, I decided to just let it go and only get I only put the ad up at the very last spot because if the SPY is going, it pulls a lot of stocks, especially with good news, it pulls a lot of stocks up with it. So at this time the SPY had just erupted, so I said I'm going to remove these ads and just get the top ad. So that ended up being a little smart because it just ripped right at the high of day, but my trade was still intact. I got the one ad, and then I'm starting to cover, because of the news, I'm starting to cover conservatively, but the goal is to pay upon this crack, right? The goal is to pay upon this crack because I'm expecting a bounce back up, right? Because large caps always do that. Whenever they always rip back, and they trend a lot better than small caps. So every crack of the low, I expect it to make another lower high. So the important parts about this trade is I waited for the first lower low, right? And then I scaled into the push on the lower high, right? And so you guys can say that I'm anticipating the lower high, and you're absolutely correct. But what I'm not anticipating is the setup, right? The setup is valid once I get my lower low. So I got my confirmation, right? The confirmation of setup is there, not the outcome. Am I anticipating this lower high? Yes, I am. I 100% am anticipating this lower high. But my trade isn't defined by whether or not the lower high happens or not. My trade was defined by the fact that we didn't make a higher high and we made a lower low. The trend is now broken. I'm looking to short pops. My setup's gold. My setup's valid and ready to be traded. So I did get my confirmation of setup this time, and I covered into my time frame, right? When I'm shorting into here, I'm looking to cover down here. Now, what happened to my other oh, there it is. It's out of order. And so this is what the stock did after I exited. It actually went to red, I think, almost. No, it didn't get. I think it got down. Oh, I'm pointing to the screen like an idiot. It got down here. So, this I didn't anticipate this. I'm not necessarily afraid that I missed this. One thing I could have taken into consideration was that this is a bigger time frame lower low, and maybe that's setting off that. In hindsight, I can say that, but it's also 3:30 p.m., right? Oh yeah, thanks, Sam. It bounced off red to green. But it's also 3 p.m. and it's been trending up all day, so this is kind of the panic. That's not really what I wanted out of the trade. I didn't even take into consideration, to be honest, the time. Maybe that I might have saved a piece. I was happy with the trade regardless. This is what I wanted out of the trade when I envisioned it up here. I imagined covering down here on the VWAP crack, and then expecting more push back up to 27, 27.10, kind of a trend. But it just decided to wash, and I wasn't a part of it. So that sucked, but I got my trade out of it. So anyway, next was Roku. This was today, and this was kind of just a ho-hum trade. But I put this here because it's a good comparison to the work trade that I just did, right? So here, I'm basically trying to trade this as a trend as it is, right? But look at what I did, right? There is no lower low here, right? This is definitely an anticipation trade, right? See the difference between this one? I get my lower low and I'm into the pops. compared to this one where I'm trying to guess the top. This is an example of me anticipating the setup, right? I didn't get a confirmation of the setup. These are more feelers that I was trying to turn into a trade, right? And normally these don't work out for me, but I've learned about these trades to just don't marry them, right? So, I didn't marry it. And because this was Roku and it's a heavily shorted name, the SSR was on, it had a big red day yesterday, and this is into the bounce. I'm keeping well aware of the fact that this can recover, right? And that this could very well, where I covered some down here, I only covered a quarter down here. So this was basically like a break-even trade. Like I was hoping to get down here, so like I barely got a cover, and I barely felt like I got the very bottom, like I was lucky to get this cover. But I was keeping in mind that this could easily just make a higher low, and that it would continue on its trend. So you can see I played it very safe, and of course it goes down after I exit. So whatever. I was being safe. I was okay with it. But the reason why I decided to anticipate, because we're right at around here at about 10:30. We haven't had a significant pullback since the move started. This is kind of maybe where you tend to see retracements to VWAP at around this time. If it's going to break, it was going to kind of break down here. And, you can say I was kind of right. I was a little too conservative. I was really happy to be conservative with a name like Roku. It's heavily shorted. It's literally like everyone's like, it's kind of like beyond me. Everyone wants to short Roku because it literally just went ridiculously parabolic. So I'm keeping that in mind. The SSR's on. It was a ho-hum trade, but you see the difference that this was an anticipation trade versus the confirmation trade. The confirmation trade, if this trade was confirmed, I would have been adding up here, right? But it like work, I would have been adding up here, right? But this wasn't, so I'm covering because I'm not playing any games, right? And this is what I wrote down in here, right? Some trades that I take, I will only accept them if they want to be easy, right? And this stems from a little bit of impatience, but in a way it's a healthy impatience, because I don't want to be impatient on a stock that doesn't have two things, that hasn't confirmed and that's not working, right? If there's two setups and I'm literally only going for the easy trade, and I'm not trying to double think and convince myself that I need to be patient or have some kind of measuring, dick measuring conviction. I don't need any of that, right? On a trade that hasn't confirmed and that's not working. If this is after I wanted this to roll over down here and stay under 33. When we got back over 33, I knew that there was still a question in the air. That's not the idea of that trade. I felt like I got the top, and I wanted it to be easy, right? So these kind of trades, if it's a pain in the butt stock, if there's there's no reward worth it on being patient on a stock that's not working and hasn't confirmed. So this is where I will just I may put feelers out there, but I'm going to quickly get out. And this could have easily turned into a trade. This is kind of I think an important topic that new traders should hear, but maybe not just to know in the back of your mind that sometimes trades turn into good trades, right? But a lot of times you have you'll have this hesitation to enter, and what this could have done had been turned into a nice long downtrend where it tanks down here, it pops up, I add on the pop, and it comes down. But I won't take that trade if I wouldn't have gotten the feelers in. So this is kind of more of an advanced technique a little bit, starting in with the feeler because you are anticipating. But what you have to know about is if you are anticipating, you can't play hero, right? Homie don't play that way, right? You can't do that. If it's not gonna be nice and do exactly what you want, you kind of gotta just take it, accept that it's it's very likely may stop you out, and you just accept it and move on, right? And that's kind of what I did. And this eventually came back, right? So I honestly don't feel too bad about it, but I honestly don't even feel too bad about missing this. It held lower. I kind of wanted more of the retracement back down to here. It's not what I wanted, so I'm okay with it. Imagine, where would you have been confirmed if you waited on Roku? Honestly, this didn't really give a good one because, right, the confirmation for me would have been under here. Oh, shit. Would have been under here. But this, we're starting to get too sidewaysy action and VWAP's right here, and it's not giving me a snap to get in. I would have liked to have gotten in under this low and ideally a push, a rejection back up here, but that's not kind of what we got. It just kind of went sideways and slowly trended down, but kind of sideways in a way. This is very slow slow moving and almost consolidating. So like where my confirmation would have been like down here, but then I wouldn't have chased it down here. I would have wanted to get in on a pop. Do death lines apply to these charts as well? So the death line setup is normally strictly only for small caps, and this is because the death line has the assumption that the stock, once it goes under the line, is going to die, right? It's called a death line. The stock is going to die, right? Now, see, large caps never die, right? Like Apple won't have a death line where it goes to 0 once it reaches the death line, right? And neither will Roku, right? So there's a certain amount of on-off switch that needs to be attributed to death line setups, and large caps typically don't have them. There are a few exceptions to where a large cap can have a death line, and that's on a severe catalyst when there's hype, right? Because see, the major thing with small caps and death lines is that the death line means the death of the hype, right? And once the death of the hype happens, normally with small caps, they just die and then a new one pops up the next day, right? And so that's why it's called the death line, because the hype is now dead for that stock, right? So normally large caps, they don't really move in hype per se. Like catalysts move them and then they trend, right? But if there's a huge move, like if, let's say, if Apple if Apple and Google were going to merge or something like that, and then it soared Apple just straight through the roof, right? Now that's kind of a hype catalyst where the hype on that may die. So if that move gets overextended and starts getting into the 3 million or $5 trillion value, and it's saying, hey, this is getting a little extended, this hype might die, right? Then there could be like a death line setup, but the death line is for the hype, right? It's not for the stock. Right? Death line is really only attributed to hype, and for a small cap, all the move is hype, and so that's why death lines work so well with small caps. So large caps very infrequently are going to have death lines because you need a certain amount of catalyst that's creating enough hype for the stock to actually maybe come back to where it came from, because the entire move on the large cap is just hype. That's not as frequent. Okay. So yeah, most trades aren't worth the fight. There's always a new fight waiting, right? Yeah, and so and what I meant there is I was going for the easy trade, right? So let's say if I was going for the easy trade, it pops up here and I hold on and I hold up through this high of day perk up and stuff, and now I'm wondering, okay, it just stuffed high of day. Well, now there's a new fight. Now I'm fighting people who just entered in here and I'm already behind the bus with a lower average. This is why I don't want to fight stocks. If some stocks I trade, and if it's going to be easy, great. I can get a nice solid win out of it. If it's not going to be easy, it's not worth the fight, because even if you win, even if you survive one fight, there's always going to be another fight waiting for you. All right, and so Yuma, why did I call this Yuma? That was a mistake. That's why I can't remember SBI. This is supposed to be SBI. This is I don't know, because I want to go over Yuma, actually. Yeah, here's the SBI tree, but I don't remember putting it in here because I know I named it Yuma, which is really dumb. This should say SBI. I don't know why I have Yuma on here. Anyway, so what I was going for on SPI was the washout long. This was a very washout long into support down here. This is kind of very classic setup for me, right? I'm going for the washout long. I'm starting in hoping to, and I have sells in the high 60s and 70s, right? These are where my sells are currently at the time. And then we keep going down, and I'm getting close to stopping out of this trade. Because the washout long kind of isn't happening, but I'm trying to give it a little bit of slippage, a little bit of extra room to maybe I tried to hold here and it goes to tank and everyone chases down here, and I get some solid ads on the trade. I think I have a 36 average or something like this. I'm right in it. I'm right in here, and I'm going for the washout and it just goes sideways. Now this is something you don't want to see if you're a washout longer, right? If you're a washout longer, this is something that you don't want to see. You don't want to see the stock wash out and then go sideways, because if it goes sideways, it means that everyone in here that's waiting for the pop is going to get restless down here, and there's going to be chasers and longs. Just shorts are going to chase it down. Longs are going to add to the fuel, and it's just like you need the pop up or it's getting dangerous over here. So I time out of the stop right here, and this actually I time stopped out right here, um, and this is actually where the stock kind of got really ridiculous. And I remember talking about this in chat. The 955 when it flushes, I keep doing this like the mouse is right here. The flush is right here, and then it comes back, and like you see, I get out and I actually get back in because I'm like, oh, that was a big trap, right? So I get right back in, and then it stops. I'm like, okay, so we flush and then instantly recover, and everybody who just shorted is now covering up, and then that move stuff. So now we have, this is what I call a fuckboy stock, right? When we make a lower low and a higher high. Now this happened in like 2 minutes. But, you know, often like if a stock is going to trend and it goes up and down, and then, you know, it goes up, higher low, higher high, lower low, and then a higher high, that's now what I consider to be an asshole stock or a fuckboy stock. And I normally don't like to touch those for the rest of the day, because if they're going to break trend like that, if they're not going to follow the rules of basic trends, where when you make a lower low and you go and pop up, it should make a lower high. If it decides to make a lower low and then a higher high, I don't want to be a part of it. And so on the small 1 minute time frame, that's exactly what the stock did. We actually did break down here, but then we came right back over 340. And once I saw that, that definitely points towards manipulation, and you almost don't want to be in at all after that. But naturally, I was like, I can do this. I can beat the stock, right? So I then decided to start building in short, right? So I ditched the rest of the long right here. I sold half right away because I didn't like it, but I'm like, maybe it's gonna hold. But I just decided to bail, and of course it goes right back up. But at this point, I decided to bail because I'm ready to short. So I put on my first short right here at 340, right here at the line. Just in case, like it felt like someone was behind the move. And so I'm thinking that, you know, like this is one thing you don't want to see for a long. So ultimately, I think longs are the ones that are the most unhappy. So stocks that are pushing into this almost seems fabricated, that like we stuffed here once. I think maybe we're going to stuff again. So I'm willing to actually go all the way up as high as I do, but I'm willing to go all the way up to VWAP and beyond some, hence the ads, because I'm feeling like someone's just getting this up here to epically tank it. And so we get up here and we epically tank, and I have covers down here, and like I ultimately just decide to just cover it all right here, because like it didn't just completely smack down. Like I thought this was going to be a huge push to VWAP and slam. You know, the thesis of this trade was the manipulation, like push up, push up, push up, mega slam. When we got a mega slam and we held 340, which was the top of the range over here, you know, like I just decided to cover everything right there, because I was like, I'm done, right? I'm already red on it, and I'm just like I make the money back here, and I'm just like, you know what, I'm done. And so I actually don't have the rest of the chart, but it eventually comes back down here, and like for a split second, I'm like, oh crap, see, it is gonna do that. And then like we see this massive candle up here. I remember this massive candle. I'm like, yeah, good. I'm glad I'm not in it anymore. So that was my trade on that on SPI. So yeah, so that's basically what I did. All of this pointed towards manipulation. So then I flipped short, thinking the manipulation was on the short side. I scaled into the VWAP push. I covered immediately because it didn't break down immediately. And like I said, homie wasn't going to play someone else's game, right? I only wanted to play the game if I was going to be on their side. Right? I only want to be on the big money side. And it looked like big money was prepping it for a slam, but the fact that it held 340 on the slam, like it would have been my contention if they were pushing it up VWAP to slam it, there's no way 340 would have held like that. So that was it. All right, so those were the trades. Yeah, so I know why I have Yuma up there. You guys have to remind me. Yuma is important to the first resistance stock that we're gonna have. And I'm gonna have to find it. All right, so yeah, so we actually had a lot of movers. Like I had to actually make this kind of smaller than normal. But it's almost 50-50 again, you know, like last week was 50-52 with the greens and the reds. And normally it's mostly red in small cap land, but this time we're seeing some movers. And for those who this is their first time of the market sentiment, this is where I assess all of the main movers of the week. And the red and green does not necessarily mean that the stock held green or the stock went red. I give it a red or green based on what I feel like if the expectation of the move was superseded, which is green, or underperformed, which is red. And some of these red ones just like popped up and died, which is why like a lot of these failed pumps like DRAD just kind of like popped up and totally died, right? Like Taper popped up and totally died. MTSL popped up and totally died. And that, like, you expect some kind of play, some kind of momentum, some kind of like volume to the stocks before they die, and that's kind of normal. It would get a black right there, but these just kind of just fell lackluster. These stocks all held the gains stronger than like I feel most of the market was anticipating. Cint is still hanging in there, right? SPI is still hanging in there. TTOO is still hanging in there. Yuma is hesitant. Yuma is like holding on by a thread, but it hasn't broken down yet. These are all moves that I'm hoping maybe make secondary moves next week, and those could actually probably be pretty good longs if they catch shorts off guard, because most of the time, I think these are beating the expectations of the stocks. Like mostly they break down by now. So I have all of those on watch for next week, potential longs. And these red ones are just pretty much dead. So anyway, yeah, so EROS was today, and SBI still holding strong, keeping the spirit alive. Fed cutting rates, now this could be over here too. It all depends on how you look at it. Like, I don't want to get too much into like macro talk, but like, like we all know that like the basic, like the basic rule is like if Fed cut rates, that means that it's good for the stock market, right? It makes lending easier. And it makes it easier for a business to thrive. So the Fed cutting the rate is normally supposed to spike the market. But in the last recent like years, it's like whenever the Fed raises the rates, the market sees that as a sign of strength. And thus, when the last few times the Fed raised the rates, we actually saw the SPY go up because people are feeling confident that the Fed feels confident enough to raise it because the market's so strong and that the market can sustain it. So literally, I feel like cutting rates can go either way now. It's really a little ridiculous. This last time Fed cut the rates and there was a spike in the market. So I almost like, but ultimately, I guess it is. So the way I put positive and negative is however the market reacts to it, right? If the market reacts to it positively, it's positive. Like we're traders, we're innately behavioral finance traders, right? That's what we do. We trade off human behavior and behavioral finance. That's what we do. SPYs at all-time highs. That's good. I think that's what's keeping these. That might be playing a role into keeping these stocks up, right? I always think the SPY at all-time highs is good for market activity. The negatives is like AIM just totally failed. I mean, it's a positive for short sellers, but it's a negative for buying pressure and shorts. As much as shorts need buying pressure in order to get stocks up to short. So like when stocks just continually die and die and die, it just beats longs down into a pulp to where no one's willing to buy anything anymore. So, so when stocks just continually just fade off, it's not healthy for the future of the market, if that makes sense. I mean, haven't had a whole lot of low growth runners. Most of the stocks that have been moving have been kind of middish, right? SPI is like a 6 million share float, right? That's still low. Under 10 is still low, but normally we're always having a couple like sub 2 million share floats in play. Right now, I think we're dead in the middle, right? I think we're dead in the middle of the market, right? Like we've been over here. I still think if I had to put us in this chain, I'd put us right here. We're kind of past the buy now, ask questions later. There's none of that super hype that comes from the dead market, but it's a steady market. So I don't think we're in the tankers market. We're kind of right in the middle. So that's where I feel we're at. And so I didn't change that. So anyway, so a healthy borrow, right? A healthy borrow, you guys are gonna hear me talk about. You guys are gonna hear me talk about this in the chat from time to time, and you've probably heard me talk about a healthy borrow. But before I get into it, let me talk about like the basic of the borrow game for all the new traders out there, right? The borrow game is basically when you're fighting to be the only one to have the borrow, right? In a perfect scenario, you are the only person in the world that has the short, and everybody else in the stock, the only one else in the stock has to be long because you're the only one in the world who can short. So that means if a stock spikes up, that means it's not spiking up on any covers. It's only spiking up because people are buying it at high prices. And if people are buying it at high prices, when the stock turns around, everybody turns into sellers, right? So if you're the only person short, the only trades that are going to be happen once the top is put in, once the buyers stop buying, the only trades that are going to be taking place are going to be sells. And what happens if you're the only person covering? Well, you basically get to control the price, right? Your cover is going to be where they get to sell, right? So if it's you versus, if it's only you and one other person, they're buying and you're sell. If you're buying, you're covering into their sell. If you're the only person that they can sell into, you get to pick the price if they want to sell. So in a perfect world scenario, you are the only person short, right? Or so obviously that's not going to happen, but you want to be in the few minority of the people who have the short, right? So it's always a big fear, right, when everybody else has a short. And this is what is known as being short crowded. And this is review for some of the people in here, but I'm going over it for the new people. You don't want to be in a short crowd we call it a crowd with everybody else, right? Because when you're short with everybody else, you're just like this, right? I think this is the perfect way to describe what a short party looks like. It's just you're just another one of the anchovies. There's 1,000 anchovies. Everybody wants the same thing, and when everybody wants the same thing, nobody's gonna get it, because everyone wants the cover at $5. So that cover that means everyone's putting their buys at $5. And the people who are going to get the fill are the people who have 501 or 502 or 503 or 504 and 505. And the demand pressure just builds and builds and builds. So, a few years ago, I remember there was a poll or a tweet on Twitter. I forget who said it, but it was agreed upon pretty unanimously that the most undervalued skill in trading, especially in small cap trading, is the ability to recognize when to GTFO before the herd. When you can recognize that you're in with a herd and you can get out before the masses all cover at once. And this was a couple of years ago, everyone was it was like the most liked tweet of the week or something. I forget if it was a tweet or a poll, but this was definitely unanimously regarded as the most undervalued skill. And so this is the situation, right? The borrow situation has become part of the game for short sellers and longers, to be honest, because if the stock doesn't have any borrows, you almost don't want to be long, right? You almost don't want to be long because if the stock doesn't have any borrows and there's nothing to squeeze a short, well, if a shitty stock is up and there's nobody stuck short, I mean, everyone's backholders are just going to sell that down to oblivion, right? Because if there's nobody to squeeze, there's no way there is a way the stock can go up, but it has to be true demand. But trying to find true demand for a really crappy company is very hard. Normally it takes a mix of short sellers to boost up. So it's part of the game for long-term shorts, whether we like it or not. It would be so much easier if every single stock had a limited, it was perfect, a limited amount every time. So if you were early, you were some of the few, but that's just not the way it is, right? Sometimes the borrows are just so plentiful and sometimes there's just nothing. So we have to deal with that fluctuation. We always have to be the judge of what's the borrow like. And this kind of is in every trader's mind before they enter a short. What's the borrow like, right? Who's in? Everyone has to deal with who has the borrow. How much borrows is out there? How much has been dealt out at this broker, at that broker, at that broker? I remember a couple of years ago when this really started to become a factor. I mean, I would be checking with my brokers in different accounts and I would be messaging people at other accounts being like, hey, Trade Zero have this, hey, Interactive Brokers has this. I know E-Trade's got this, Cobra's got this, Centerpoint's got this, right? I wanted to know, who Thinkorswim, who's got the borrow, how much did you get, what are the prices everywhere, right? It's become it became an ordeal, and it's still it's evolved into part of the game now, right? So I did some study in the past, and I concluded the following about the whole borrow game, right? So the general rule of thumb for the borrow is stocks will tank more easily when it isn't short crowded because traders are more likely to go long because traders are stubborn degenerates that if they can't short it, they're going to try to find an excuse to trade it anyway. And that's going to tilt the scale. As long as you're betting on traders being emotional, impatient, degenerate people that need to gamble, If there's no short borrow, chances are there's going to be a long crowd in the trade. Right? There's going to be a long crowd. So that's the first part of it, right? And the second part is that there's no covers blocking the way down every inch of the way. That's the second part, the other half of the coin. When it's not short crowded, there's no covers. That means that like the bid can just fall, right? Literally the bottom can rug pull. The bottom can't rug pull if there's like, if the crack level is 80 and someone has to cover it like 76. It's like gonna be like, and it's gonna like be really annoying on the way down, right? And you all you short sellers in the room know this, and it's really annoying, right? So that's the general rule of thumb. So now here's my approach, and I seem to trade best when there is what I call a healthy borrow, right? The above, this is true. It's true and good if you have the fader's patience, right? Like let's say there's a stock that's not let's say there's a stock that's not short crowded and you're short. The thing is that stock can still slowly trickle down because longs are a lot more stubborn than shorts, right? Longs are going to bag hold the stock, and not every long might sell at once. People are going to wait for that stock to come back and wait and wait and wait and constantly try to dip buy. And there's going to be this long decay just because longs are more stubborn, right? Even though it might not be short crowded, that may not necessarily mean it's going to go straight from 5 to 3 in like 15 minutes. Sometimes that's really nice, but not all the time. A lot of times it's still going to be a fade just because longs, now that it's long crowded, now you have to deal with the long stubbornness. And a lot of the times, these are the ones that like have zero volume in the middle of the day, right? Zero volume in the middle of the day because it just like it's dead. Nobody wants to sell, but near the end of the day, they have their cracks because everyone just, at the end of the day, people are like, okay, it's not coming back. Fine, I'm going to sell. And like you have to be really patient for that end of the day crack, right? And that used to be a really good setup. And now like the bar, everybody's short all the time. And that kind of like has kind of faded away a little bit. And that's why I've turned into more of a more nail and bail trader. But that's me. I've kind of given up on fades. But that's the reason why, if you're wondering why I never hold for the huge move, that's kind of why, because just the borrow is so much more competitive and I don't see that kind of pure long crowd anymore. Yeah, but basically it's, it takes forever because longs are stubborn. And the second part of that coin is no shorts are there to attack. Now, this is why I like a healthy borrow, because I'm more of like a nail and bail trader. I have a shorter time frame, probably not more than the average trader, but I definitely don't go for fades. And I'm in it for the hit it and quit it, right? I want to nail and bail and get out, right? So when the borrow is available, I know that there are traders who have the means to slam the stock and are waiting to slam the stock, right? So my rule of thumb is when there is easy to borrowness in the stock, it usually helps me immediately, but it hurts me in the patience place, right? So another way to say that is easy to borrowness will help me with my entry, but it'll hurt me on my exit. Because, like if a stock's easy to borrow, normally in the morning it gets hit and hit and hit and hit and hit, and everybody wants to short it, right? And everybody wants the piece. And I can get my covers into their chasing because them chasing is giving me the cover that I want, right? But if I plan on holding that stock, now everybody who chased, I now have to deal with them in the middle of the day. In zombie hour, I have to deal with them in the middle of the day. If I want to get my fade, I have to outlast them, and I have to assume that shorts are going to lose, that there are going to be weak shorts, and there's going to be intermediate shorts, and the weak shorts are going to get out, push the stock up, and then they're going to make the intermediate shorts nervous, and some of the intermediate shorts might even end up covering because they get nervous, right? And so basically I have to judge my patience versus theirs while I stick it through that middle of the day typical like perk up that stocks normally tend to have in the middle of the day during zombie hours, right? I have to be able to survive that, or I have to be able to say that's not my game, right? So for me, I like it I like it when there is a little bit of shorts able to hit. So if I can get in before they hit, then they can help me get my covers in the morning. So that's what but at the same time, I don't want it to be super plentiful. I don't want it to be just everybody in the world has the borrow, right? Because oftentimes, sometimes then then I'm looking more for a long. Everybody's got the borrow. I might be looking for a long. Like if it slams in the morning and I know everybody's got the borrow, I might turn that into a long then, right? Because it'll probably just slam out of the gate and I won't even get a chance to short it. So that's kind of my view on the borrow situation. My best trades are when there's a healthy borrow, when there's some shorts available. I know there's some shorts in, but it's not super plentiful, but I have enough to where like I don't feel like I'm going to have to wait for a patience play, and I'm not going to have to sit through illiquidity because longs just don't want to sell, right? I'll get to this question at the end because it's I missed it and it's a little off topic for right now, but we'll get to it at the end. So that's my view on borrows. So now onto the first resistance stuff. So the first resistance stuff, I put Alex's trade up here today on WWR because this guy and Bao in particular stole my fill because I was at 20. I had my orders at 27. He got the fill and I didn't. It was pretty illiquid though. I'm not necessarily surprised I didn't get the fill, especially when like we got Bao up there front running. But anyway, I put Alex's chart up here because this is essentially like I didn't trade it up to here. Like Bao shorted all up in there. I was waiting for the halt open like Alex did. He got the fill. He was a little bit more aggressive than me. He was at 420. I was at 427. It's probably why he got the fill. That was annoying. But anyway, this is a perfect example of a first resistance short, right? The line is here. This is the first time the stock is getting here. It's extended. It's getting up here. First time it touches, it's probably going to fall, right? That's the theory. That's the thesis, is that the first resistance short is a short into resistance play that is only valid the very first time the resistance is tested. The second time it's tested, it's not valid anymore because now it's more likely to break the second and third time, right? The second and third times are more likely to fail. And this is, ironically, everybody waits. Yeah, Dick. This is why everybody waits. Everybody waits for the first resistance to happen, right? Everyone waits for the first resistance to happen, and then they go in for the second time, and that's the time it blows off through the air because they were going for the safe trade because they weren't confident in trusting the lines, right? So this stems from the philosophy that I like to call the first time philosophy. It's basically, it's what connects the first bounce to the first resistance short. It's what makes them cousins. The fact that they are, it's all generated on this first time philosophy. The first time philosophy is a philosophy I use to explain price actions based on the emotions and self-fulfilling nature of the stock market. So it's very simple. It's the very first time a support or resistance is tested. That's the most probable time they're going to work. Second and third times are going to fail because now it's given everybody a chance to, it's given everybody a chance to cycle through, make a higher low, and now there's like a new floor for longs, right? It'll normally pull back, it'll make a higher low. Now longs have this secondary surge. They feel like they have a higher low to base off, and now it's a lot less likely that that resistance is going to hold the second time or the third time, right? So the first philosophy I think will help change the way you look at trading, because many other, like once I go over this, I'm hoping that many other strategies and chart patterns you see, you're going to start to see the logic of the first time philosophy, right? So what is the first resistance short as when it comes to time frame, right? So the first resistance short can literally be used on any time frame. And I kind of want to dissect this Roku a little bit. This was today in the morning. So normally the criteria for a first resistance short for me is a stock, a resistance is put in and the stock has fallen, decently fallen and spent enough time down or significantly far away from the resistance line to where it has to travel before it gets up to the resistance line. Right, and so that's kind of the criteria for it. So things you want to see. You want to see, like I just said, extension to the level. You don't want to see a stock trending. If a stock's trending up to that line, it's likely just going to reject probably the first time, but you're going to have a very, very, very higher low that's going to get in your way of making profit. So you want to see extension up to the line, and this is normally what causes the fear because it's on a parabolic. It's going to parabolic. I'll check that out later, Josh. It's going to parabolic up there, and everybody's afraid because it's fast, it's moving, and not everybody plans their trades out. They're trying to trade in the moment. They don't have their stops pre-planned. They don't have their risk predefined. So they hesitate, they miss it, and then they try for the second time, and the second time it blows through, right? They want to see extension through the level. And basically what this means is that the smaller time frame resistances are being broken, likely on the second or third attempt, right? So like, it means that like the smaller time frames are breaking on the second attempts. That's, the smaller time frames are breaking, but it's not necessarily the time frame you're trading. It's still a parabolic move with no consolidation. There might be a smaller time frame consolidation like this. This is, if you're going for this resistance up here, you're not really looking at this as consolidation. This is pretty much just a big move, right? And so basically you see Roku like soars up here from pre-market. It gets up to here and it falls down, right? Now it doesn't, the first resistance is always a front side short equals front side cover, right? Whenever you're shorting the front side into the move, you are shorting on the front side at the first resistance. This is, for me, always going to be a front side cover, right? So it stops up here, right? And I honestly wasn't watching it, or I might have entered this trade. I was watching the flavor of the day, which I already forgot. WWR. Yeah, so this pops up here and it rejects, right? But then it pops up a couple more times, and the third time it breaks. And this is why you can't wait for it to happen and then go the second time. It's not the same, right? If what you're going for is a first resistance short, there is only one time to get in. And the only way that you're going to be able to prepare for this kind of short is to have your stops pre-planned, to have your risk predefined, to not be afraid, because the people who are afraid miss out. And so I wanted to really dissect this. And so this is a large time frame first resistance. There are I wonder if I have a closer up zoomed in. Nope, I don't. So there is a zoom. Now you can use the first resistance short on a smaller time frame trend too. And this essentially becomes what's known as channel trading. And this is what you see Bao do all the time. He's trading on the 1 minute time frame, right? This is more of kind of like a yesterday into the day multi-time frame kind of trade. Whereas this lower high right here, if you really want to dissect and put the microscope in on the stock, right? The stock is stopping right here because this high of day is now the resistance of today. If you ignore the chart from here on, and this is if you're zoomed in here, and this is the very first high, this 131.50 high is the high of the day, and now you're thinking, and it pulls back down here to 128. If it pops back up to 131.50, you got yourself a new first resistance short, right? If this is the resistance you're playing off of. Now, if this is the resistance you're playing off of, you're on the second time. So this is why time frame is very important, and it's because it's going to help you determine it's going to help you to define exactly when you are wrong. So for example, I can short right up here on the lower high, and I know immediately to cover over the top, right? Why? Because I'm trading for this first resistance, and I might give it a little bit of slippage, but any kind of hold and I'm out, right? Any kind of hold and I'm out because this is the first resistance I'm going. Likewise here, if this is the big line that I'm trading and I'm shorting right over here the very first time, if it consolidates and breaks over, I can't hold on to that because my time frame is a larger time frame. If it consolidates on 15, 30 minutes here and then comes back again, that's now a consolidation nearby the level you want to attempt. If this is the level and it's consolidating near, you have to cut it above here, right? You have to. But if you're on a smaller time frame, you can justify a trade shorting into this lower high, considering that you're shorting into the high of day first resistance. So always the order of the kind of process you want to make is determine what your resistance line is. What is the first resistance line you are attempting to short into? That's the first thing you find out. The second thing you find out is what time frame is that trade. Am I looking at a high from 6 months ago? A big volume burst that I'm looking at 6 months ago? Is that the high? Because now we're talking more about a daily first resistance, and you might have to give that more slippage, right? Or are we talking about this little itty bitty mini time frame right here where I'm literally shorting this lower high because my first resistance now is on a 1 minute time frame in this 30 minutes to an hour the stock's been trading. The high day is 131.50. If we get anywhere above 131, I'm shorting that for the first resistance. And I know immediately that like 131.50 plus slippage, I'm out. Like I'm not even consolidates, holds, maybe perks up and doesn't break down. I know I have to get out. Like knowing exactly when you're going to have to get out is going to give you the balls to put your shorts in front of the train. So things you don't want to see is range getting tighter, and this is, I'll have some more channel trading examples. Range getting tighter and consolidations nearby the level you want to attempt. You want to see it not hold high close to your level. How would an intraday first resistance short, like shorting pre-market highs, be different than last week's stuff trade on SINT? So if, an intraday first resistance short, like shorting pre-market. Okay, so yeah, so that's a good one. Be different than last week's. So last week's stuff trade was an SINT, but good question. I'm going over it on this slide. Perfect timing. So I just copied that slide, but I wanted to show this picture. That's right. So this is essentially what I just talked about on Roku. The reason, so this is my theory on why stuffs kind of tend to happen. The reason why stuffs tend to happen is because it's a couple different trades in one and everybody hits it at the same time. One, it's a stuff setup and everybody's expecting the stuff setup. But two, this right here is a high of day. Now you can justify a trade up here, not just because it's a stuff, but because this is now a first resistance short if you're counting this is the first line. If this is the line that you're playing off of, if you didn't have any resistance lines in mind before the high of day happened, the very next time it gets up to high of day, it's technically the first time it's approaching the resistance level since the resistance level was established. So normally when stocks perk up here in a very stuffy way like this, everybody sees it as a first resistance and everybody knows that it's an amazing risk to reward, like literally an amazing risk to reward trade. If you just throw size on right here and risk what, like 10, 15 cents over high a day, it's an amazing risk to reward trade. And you're getting the first resistance, most probable factor attached to your great risk reward. And now you have a high probability setup with an amazing risk to reward. And that's why everybody jumps on it. And when everybody jumps on it, you get a big stuff, right? So this is almost like, this is my theory for why stuff tend to happen. It's almost a byproduct of the first resistance of the high of day. So that's kind of just what I wanted to go over, and that kind of answers your question right then and there. So what's so special about, wow, this is what was going on. What's so special about the first time philosophy? The first time philosophy assumes that the edge is in being comfortable with not being 100% confident, right? And a lot of new traders especially can't get into a trade unless they feel like they have to get in. They can only get in if they know what's going to happen. And I got news for you. That doesn't happen, and you'll never trade the first resistance short if you think that you're going to know what's going to happen after. Like that doesn't, you can't have that. You have to go into this kind of trade with the, I think this is probably going to happen mentality, right? You have to be, the first time philosophy assumes that like when you're buying that first support or shorting that first resistance, that you are comfortable with the fact that it could just blow right through. You don't think it's going to, but you're prepared for it. And you're comfortable, you accepted that risk because you've predefined it, you're aware of it, that you got to stop and you know how much you're going to lose, right? The edge is in pre-planning and knowing your risk and being comfortable with not being confident. Now, let me tell you who's not uncomfortable selling at resistance without confirmation that it's actually going to stop. Just all you have is a line and a resistance line and saying, yeah, it's going to stop up there because it's resistance, right? Let me tell you the people who's not uncomfortable. Longs who are looking to profit. A long who is looking to profit is not worried about, they're looking at their resistance line and they are not worried about it blowing right through. They're afraid of it stopping, right? So there's fear that the stock is going to stop. There is fear from the other half of the trade. Most people don't think about the other half of the trade when they're short. All they're thinking about is other short sellers. Longs, I'll tell you what, if you're long and there's a resistance line up here at 310 and you're long up here, you are getting afraid that it's going to stop, that it's going to reject. And so what are you doing, right? Longs who are looking to profit are not, they're selling. There is going to be selling pressure there. You don't know if it's going to beat the buying pressure, but you know there's going to be selling pressure there because longs who are looking to profit are trying to sell before resistance, I promise. The other people who are not uncomfortable is shorts who know this, right? If you know this, and like Bow kind of falls into this category, right? Shorts who know this, or big money who knows this, right? Hesitant longs who don't want to buy just in case it's the top, right? So let's say that you're bullish on the stock all day. You maybe not want to be buying it right over here, right? Because every long is a little bit queasy when they're buying up there. So automatically, people know, longs who are looking to profit and shorts who know this, know that longs are also going to be hesitant. There's going to be a decrease in demand up there, right? So you have longs looking to profit, shorts who know this easing into the trade, longs backing off, right? And inquisitive shorts who want to test just in case at the top. You have these four factors, right? All saying that it's probably going to work. But, you know, us as traders being just so egotistical about having to make a green trade because we don't know and because it's moving fast, we're not sure it's going to stop. We're like, well, let me just be and watch this one. I'll learn from this one. And you do that over and over and over and over again. And you eventually have to be like, I just have to put an order up there, accept my risk, and trust that these four factors are going to give it, you know, the setup that I'm looking for, right? So these guys, these are the four guys who are helping to create the self-fulfillment for why the first resistance short works, right? You have to have the edge to, you know, to be confident, you know, or comfortable not being confident. So while you're sitting on the sidelines too afraid to act, they're taking advantage of the edge of not having the fear because they have a trust in the line and the belief that the first time will work and their risk is calculated. Oh, it's at the very top. It's at the very, oh, she can't see this stuff. It's at the, actually, maybe it's, oh, thanks guys. I didn't post it in here. I posted it in after hours. Okay, so here's, oh man, this is a long webinar. Here are some examples, right? So playing into this resistance short, like just putting the order out as it goes up, right? And so just putting the order out. Like here I was basing my trade off 320, 340. I'm scaling into it, but it's a first resistance short, right? And an immediate cover, right? This is an old one because I'm putting the P&L on there. This is another one, right? RKDA, like 720. Right up here into this this 7 line, shorting into the 7 line for the first time, immediate cover, right? Pre-market high, this is, you know, we get our criteria, it falls down here, right? This is falling down, we get our criteria of it's been a long time since it's been up here. The first time it gets back up there, you put your orders right there. You put your orders right there. I know I went kind of fast. I mean, I'm trying to get to Tom. I'm excited to bring Tom on. But yeah, so just right here, there's the line into the daily, right? First time here. I actually think I sold it and shorted. This is another one. Like you can see, I was going for the stuff moves here, right? Like I was definitely going for this first resistance short over here, right? Like straight up into here. I was willing to go into the first resistance short into pre-market high, but you know, I did this one because it was based off this one too. Because the criteria is we had a long way from the top, the very first time we get up to the top from an extended period. And keep in mind, this is a 1 minute time frame, right? A lot of the ones are from daily time frames. Like this is a daily time frame one, right? I'm using a daily resistance level, whereas this is I'm using a minute resistance level, the intraday level. So always be aware of which one you're doing, right? So here there's an intraday level and like a pre-market level. But I'm going for the stuff. You can see it with these orders. This is an example of like a daily one. I'm using yesterday's, right? CS, where like it, you know, we get a high over here, we fall all the way down. It's like a $64 stock. This doesn't just work with small caps. This works with large caps too. Like Roku was one of them, and this one. A long way from the bottom, we get our criteria, we get our extension without, I mean, this is, it's kind of an extent. It's pretty much an extension. Straight up with no consolidation, straight into the line, and you just put it there, right? This one, this NSPR trade, this one isn't the first resistance. This is kind of just an anticipation short. But this one is definitely a first resistance because we fell down here at the open. First time we get up to the resistance line, you put a short order in. But you see, this was actually a really good idea because this trade I flipped. I took a first resistance short and a first support long, right? So I shorted up here at the open because this is the line. We get a pullback significant. We get an extended move back up with no consolidation or grindy. It's just we go all the way from down here. We push up. You short risking this level with some slippage. You cover, and then I flipped long and sold here, right? So because we got extended up here, the very first time we get to support, I actually bought that one too. This is one of my prouder trades. What's another one? This one, oh, I should have included the daily over here. I don't know why I didn't. Maybe it's on the next one. No. This one is definitely based off of a daily line, ELTK, but there's a yesterday line at 650. You just put the order there and cover immediately. And you notice all these trades, I'm covering immediately, right? All of these trades is like, this is another one, right? This is like using the pre-market high to get into open. This one is, you could debate this one kind of consolidated, and I probably shouldn't have done this one. But I was also looking at 4 line too, and it was the combination of the pre-market high and 4 that ultimately made me do this one. But you could argue that this one isn't the best one. But it's still a first resistance short into 4. Can you flip the first resistance into the first bounce if there was a previous support there? Yeah, that's what I just did. I definitely just did that. Yeah, that's actually a lot of the time. Stocks will go up, hit the first resistance, and then fall down, and then that's when the first bounce happens, and then it goes up. So here's another one, BPTH. I'm totally looking for this. I can't remember if I got this one, but I felt like this is not a trade. This is an order. I was totally waiting for the first resistance short. And this is a good, I wanted to include this one because even though I probably didn't get this fill, or I would have had this chart saved somewhere, but basically I was ready for it, right? Like this is what it looks like when the stock's down here and you're anticipating the trade, right? This is what you're going to see. You're going to see your orders up here. You're going to wait for the stock to hit your line and go for the first resistance short. Can you combine some of these with the death candle and override the front side cover portion? Or is that just me being greedy? I think that's you being greedy, but that's just me. If I have a front side short, I always front side cover because normally a stock doesn't go from first resistance short down, straight to death line. Right? Normally that doesn't happen. See, this is another one. I included this one, right? Shorting over here at 240. I'm shorting into this kind of consolidation resistance over here, 250. I was counting 252. We get up here on the daily into this resistance, and I've got the order there waiting. Like it's also like an intraday one. Like this is the first pop up, and I'm trying to be the second guy, right? Or the first guy since this resistance is established, right? This is the first resistance established. I try to put it there. CETX, this is like literally pre-market high. We fall down significantly. I'm trying to get the first pop back up with the known high. Now, if there's no good known high, so I work my way from left to right. If on the daily chart there's no good level, I then move to the pre-market. And if there's no good level at the pre-market, I move to the intraday high, right? And so if there's a high of day at pre-market, if there's a high of day, like a spike at high of day, that is now my first known resistance. Like that's when the resistance is established. And now I'm looking to be the first time it gets up there, I want to be there at the very first time it's testing. Once it's established, right? So this is the establishment of the resistance, and I want to be first. And so this is a good example. Like this is a good example of how you can do it. Like once enough time has established. So we have a first resistance up here, right? Or this is your established high of day, right? This is an established high of day, and we fall down. So what do you think I'm doing up here? I'm shorting up here, right? but we didn't get that, right? We definitely didn't get that. We got a consolidation and a perk up. Now, you notice I wasn't shorting here. Like, I might have shorted back up here if it got up here, but it didn't, right? So what it does is and this is a trade I took a couple of years ago, and now I know better. I learned from this trade. Don't learn from the arrows, because this was before I kind of concreted this out. I tried to short down here, risking this high, right? But like, I got a little in the weeds, like I was a little early. Thankfully, I was still risking this level, and I had some slippage, so it was a good trade. But now, knowing me today, I wouldn't have been shorting down here. I would have waited for this one, knowing me today. But since this high is put in, considering that this is now unreachable, what is the first resistance that I want to play off of? This is now the resistance established I want to play off of, and I want to be shorting here for the very first time we get from here to here. And this is what Bao does all day long, right? It's just a series of first resistances. Like, he'll put the first resistance up here, and then he'll nail that, and then it'll pop down, and then the stock will consolidate. It'll put in a new high, and then he will use that high as now the channel for his first resistance. And then what I said to what you have to look out for, what you don't want to see, when the range starts to get tighter, you notice Bao just says, range has gotten tight, I'm giving up, right? Because when the range gets tight, it's now tested at least 3, 4, 5, 6 times already. And you don't want to keep shorting that. You don't want to keep going to the well. It only works, the setup is only valid the first time. And you notice, like, what happens when, like, this is the first time it tests and breaks, it comes back up here. Second time, it tries to hold, but then it just keeps going, right? So, and you see, like, when it gets up here to this level, the very first time, it does reject, but it holds and consolidates high. It's something I said that you want to avoid or watch out for. And you know that if you short up here, this is a valid short, risking up here. But if it consolidates, you know, if it makes a higher low and comes back and holds high, breaks over, you know you have to get out. And that's not a bad loss if you short here and cut here. That's not a bad loss. The first resistance short is a lot scarier than people make it out to be. Okay, I got to wrap this up. And good. So that was the first resistance short webinar. Time for Q&A, and we can go over EROS. Oh, save that. Oh, perfect. And now let's see if we can bring on Tom. Tom, where are you at? TomDisel. Give me a second here, buddy. Let me turn you on here. Oh, you there?
Can you hear me?
Yeah, man. What's up?
Yeah, good. Yeah.
Hey, what's up, Tom?
Good. How are you, bro?
Good, good, good. Sorry this one took a little bit longer.
Yeah, it's okay. It's just 2 a.m. here, so
Yeah,
no problem.
yeah, just 2 a.m. Just for
Yeah, just 2 a.m. Yeah.
Oh God, Flash. Oh, you guys. Anyway, for people who don't know, Tom is our newest webinar. So I mean, congratulations, Tom. You do a hell of a job here, man.
Thanks, bro. Thanks.
Anyway, do you guys hear an echo? Or is it good?
I'm on iPhone, so.
But I'm generally best with factual
Echo.
questions.
Stop. Okay, sorry. All right. So anyway, yeah, Tom, I figured we'd go over the Q&A together. Is there anything that you like that I talked about that you want to add on to?
Man, just, you know, it's gold, you know. It's exactly what I did lately with the first resistance short. It's like I waited for the top to set and then, you know, just put my orders out there. It's just exactly like you just explained. So it's beautiful.
All right. So Tom, one thing I want to ask you in front of everybody is, like, what's the Sharpe ratio for your trading strategy? I want to know the historical variance of yours. No, I'm just kidding.
I knew it. I knew it.
Yeah. What's your favorite setup? What's your, like, I want to know what's your bread and butter. What's your favorite?
Yeah, my favorite setup is death line and low hanger. I like those because I can, you know, use size on those, especially on low hanger. It's like when stuff is dead on the day one, and then got to day two, right? You could short like the pops all you like, with all the size you want. But with the problem lately is it's the locate is quite expensive lately, with the low hanger. So
Yeah, they're
kind
getting
of skip it and switch it to a deadline strategy more. So
sure. So yeah. So if you, one thing that frustrates the crap out of me on low hangers is never getting a full fill ever.
exactly, yeah.
Right? How do you deal with that? Right? Because I know a lot of people want to trade the fantasy order way because it's like, how do you deal with it?
Yeah, lately I was like waiting for it to pop, and then I locate. So if the stock couldn't pop to the certain point for me, so I'm just gonna pass it, to the next one. So uh, I'm just waiting for the stock to pop to my line, and then I get some shares. So because that's for sure I'm gonna use that. So just got not gonna waste my locates on that one like that.
Yeah, and that's honestly that's what I do too. Like I think I
Yeah.
know on it. I always locate small. I locate like
Yeah.
I locate what I call just in case shares.
Okay.
Just in case the borrow goes away, I have something. And
Yeah,
and then,
but the problem is like I'm using TZ, right? Trade zero. And usually they cost like 4 cents, 5 cents, sometimes even 10 cents. It just doesn't make sense to get something and then not using it at all. So
right.
yeah, cost of doing business is
Yeah. And I want to make sure I didn't miss any questions here.
yeah.
Oh, I'm into last okay, let me just make sure and then we'll catch up.
Yeah, Joe.
I don't think so. Bottom fishing says trading this doesn't scare you with the limit up. That doesn't change your mindset on the pattern. That was a good question that I didn't address. I'm certainly afraid of limit ups, but I guess what I'm more confident in is that the resistance is going to hold before it gets to the limit up. You know what I'm saying? Like, and you can be afraid that like the limit up is going to happen before the first resistance line hits, but that's exactly what happened today. And Alex and Bao both nailed it, right? Just because it limit ups before the resistance, that doesn't mean people aren't still looking to attack it right there. I think I went over that one. All right. Is there a difference between scalping and nail and bail? You want to take that, Tom?
Yeah, I mean, it's pretty much the same, for me, scalping or nail and bell. You just aim for the quick move. Is like front side shorting and front side covers. I think it's pretty much what I did, when I'm shorting front side. And so I'm just aiming for the quick scalp, and be done with it, because I don't want to that the stocks going against me on that. So
Yeah.
I think it's pretty much the same for me. Bell or scalping.
Yeah. See, I think it all depends on like what your average time frame. Like a swing trader calls every one of us in this room scalpers, right?
Yeah.
Like
Yeah.
if we're trading intraday, that means we're scalpers to some swing traders. For me, scalping means I actually have a distinction for me. So a distinction I use for scalping versus nail and bail is my scalps are always range hold strategies, meaning I'm literally like I'm not waiting for the support to break. I'm covering before it breaks. right? I'm looking for the smaller profit because I don't know if it's going to break, but I'm taking it before. My nail and bail is I want it to break, and the second it breaks, I'm probably trying to cover after the break. So that's my distinction.
Okay.
So
Cool.
when you're saying time stop, is that just the time it takes to test the level and break out and break to get out of the position, or literally like a time limit? So do you do time stops at all, Tom?
Like, what do you mean time stop? Like hard stop or something like that?
Like, do you are you a like if you have a stop, are you sticking to your stop no matter what, or are you saying, or is there a certain amount of time that you're giving your setup to work?
No, I have, hard stop in no matter what.
Okay.
Yeah,
Very
it's
good.
like it's sometimes I'm scalping the stock, right? It's like I have 3 or 4 bullets,
Mm-hmm.
and then when the last bullet hit, and I just put right, the stop, after that, like all the shares, just in case, it pops up, and so I
Yeah.
have to cut it no matter what. Yeah.
Yeah. See, I'm most of the time I'm like that, but there are certain setups where like if it doesn't work in 10 minutes, I'm getting out. Like just because like
Okay.
there's something like if it's not I kind of like I timed out of SPI. I kind of time stopped out of um Roku.
Yeah, I mean, I'm doing pretty much the same when I'm shorting, and the stock, if the stock, couldn't die, before zombie, then
Yeah.
I had to stop. So
That's the most.
something like that. Yeah.
Yeah. What do you think about shorting after 10:30? Do you stop? Yeah, that's one thing I don't know about you, Tom. Are you like what times do you trade?
I trade only first hour,
Okay.
and sometimes the 2:30 p.m. But only when there's a hot check and still is not broken down yet. So I'm waiting for that afternoon,
Right.
kind of
Right.
fade.
That afternoon,
Yeah.
that's the good. That's my that's my favorite day one setup.
Yeah,
Well,
me too. Me too.
one. Besides the
That's,
first since that's my favorite day one short.
yeah, yeah, yeah. Me
And so
too.
Mashlot, I think Mashlot's trying to get at is if you are short a stock and it goes into zombie hours, do you cut your position?
Yeah.
You do, like, no matter does it depend where the stock is, or are you just like I'm totally like it's 10:30 and
No, it's not like that. If the stock, I keep grinding up
right?
and reclaim view app kind of thing, I you have to cut it, or just for me personally, like that.
Yeah, so I'm kind of the same. If it's basically if at 10:30 if I'm short and it's not working, I'm getting
Yeah.
it.
Yeah.
Kind of just what I talked about in the webinar. It's like why fight, right? Like why fight a stock? Like it's just not worth it. Like
I mean, the only time I'm still holding through the zombie hours is when I have a good average at the
yeah,
open, right?
yeah, me
And
too.
then it just, like the stop is way below view app, and then I'm just gonna, let it ride all day long, because it's my average is still so good. So
Yeah,
just holding on to that. Yeah.
and I used to think that that was like I used to second guess myself. I used to think that I was being very like I was trading my P&L too much, because if you're trading your average, you're kind of trading your P&L too, right? But
Yeah.
in a way, if your average is really good, that means
Hmm.
else's average is really bad on the opposite side of the trade. Like a lot of people's average are really bad. So it's like if you have a really likely a lot of people are underwater and like there's no chance
Exactly.
coming back. So it's actually a good thing I think that we do that.
Yeah, sometimes, when I had a, so good average, and I covered, most of my shares already, and I just waited for the pop at least to view app to add back, right? So that, brings down my average, but still way over view app. So it's still good for me, like that.
Right. And Joe had a good answer for that. this is going to sound weird, but this is how I like to calculate a reasonable borrow fee. If the range is $1 from previous close to high, I never want to borrow more than 10% of 50% of the overall range. So $1
Yeah.
range divided by 2 is 50 cents times 10%, max locate fee of 5 cents a share. Yeah, I mean, I do that all
That
the
is fucking genius.
That's exactly what I do all the time. Like, I mean, just happens in my head like that.
Yeah.
It's a good one, Joe. No, really, I mean.
Yeah.
Joe has a question for you. At what point in your recent consistency in trading did you have the confidence to increase your risk profile? And how did you do it, based on account size or dollar risk per trade?
I did 2% on my account,
Okay.
like per trade.
And is that an increase from 1%, or like how did you increase?
No, it's pretty much the same like for the last 6 months. So I'm just using that 2% of, like, for example, my account is 10,000, right? I'm just using that 200. If my account is 20,000, I'm increasing that to 400, like that.
Okay, yeah, so it's scaling up as you go. I honestly think,
Exactly.
honestly, dude, I think that's the best way to do it. The problem
Yep.
with traders is we're just too impatient and greedy. But that's
Exactly.
I mean, if you go work in any firm like hedge, like everything is based off percentage of account. Like that's how they do it.
Totally, yeah.
That's the right way to do it. We're just emotional, greedy savages.
Exactly. I was like, on, I believe it was like last year, November and December, I was like up for weeks, even months, and then just one day, wipes out everything because I didn't follow that. If I just, stick to that 2% per trade, I would make, I like shitloads of money until now. But,
And that's so good because like the thing about trading is like most traders I think are innately bad stock pickers. Like we really are. Like the trade we size up on is always a loser, just always. And so you always look back in your red streaks and you're like, holy crap, I'm winning more than I'm losing, and I'm red, and I'm red from a few trades, which means, and on those trades I was bigger than I was on all the other trades, which means that if I just kept my size consistent, I would be great, right? But it's the times you decide to trade bigger. That's
exactly, man. It happens every time, like. Yeah, I said like today's the day, man. I will size up today, and then next thing you know, boom, right?
Boom.
Fucking hell, yeah.
Dude, exactly. And so that's why, like, the way, like, if you can have the discipline to do what you're doing, then I mean, sizing doesn't even become like sizing happens automatically, right? It just mathematically.
Yeah, exactly.
Like you don't have to think about sizing, and that's actually like so. I came up with all these like weird like psychological rules for like when I talked about sizing and how you have to trick yourself. That's basically just the easiest way to do it is just have it be the percentage of the account. It does it for you.
Yeah, I mean, I did get a lot of messages, from the members. They're saying that like you're not afraid. I mean, you're not scared. Like trading that first resistance shows, something like that. Front side shorting, and I kind of talk to them like, if you pre-calculate you have the risk predefined, then you shouldn't be scared because you kind of already accept the risk beforehand, right? So what else there for you to be scared at all? If you're just gonna say, I'm just gonna spend this like $500, it's okay for me if I'm losing 500 to make 1,000, right? So that takes the emotions out of the equation, kind of thing for me, and I think that was one of the turning point for me when I pre-plan my trade beforehand, like the entry, exits, and stop. It just makes it so much easier for me.
And it sounds so easy talking about it right now, but like when you get in the moment and then like the hype,
Exactly.
it's so easy to talk about it now. But like,
yeah, exactly.
what you're saying is like just you thinking about risk first. It's mentally taking the losses because you're prepared for it, and just the trade go. And those are always the best trades.
Exactly.
Yeah, so Alex is like basically, yeah, you trade pre-zombie and zombie reversal, but never zombie. Yep. What if the deathline breaks during zombie hours? I'm not a huge deathline trader, but normally, like, I'm cautious because I'm very weary about fades these days. But what about you? What if a deathline setup that you're doing breaks during a zombie hour?
I mean, if it breaks too early, I'm kind of scared
Me
because
too.
I kind of like when it breaks after like 2 p.m. or something, not like too early, because it could be trap, and who knows. It's just
It all depends how really violent it is, I guess.
Yeah.
Yeah. Yeah. Size down. Must use hard stop during zombies. I can do more. What kind of size are you using on the first resistance strategy? Half full? Or are you doing a starter? So I try to get the balls to go the half size of my trade. And when I mean half size is, I mean, like, if I'm slamming a zombie reversal kind of 2 p.m. crack, if that's my full size, like A+ setup, I'm probably going half on the first resistance strategies. It's never going to be a full risk trade for me. It's just going to be a consistent half risk kind of trade.
Yeah, definitely.
Just because, like, I'm never going to be comfortable just throwing full size into strength like that.
Yeah.
I mean, I won't. Like, I can get the confidence enough to throw half size out there, but never a full risk trade on.
Exactly. It's like what Alex did, 30% overview app, right?
Yeah, I might go a little more. For me, I
Yeah.
might go a little more on the first resistance because I like it so much. But yeah, but that only for that one, right? Like, never scale in.
Yeah. Yeah, but the best one is after I think 2 or 2:30 p.m. crack that to major support, and you can size up on those, and it's pretty stress free. You can get your covers like right away.
Right, and it's just an overextended trend break. It's like,
I love those as well. Yeah.
Flash, I know you spoke about this in your IG live earlier. Can you go over once again how you traded during your small account days again?
Oh man, it was hard, bro. It's like I was trading 100, 200 shares at a time, and it was crazy. Like it's kind of like a sniper mode. You aim for like good entry, and then good exit. It's like one shot, one kill kind of thing. And it was like the profit was so small, and then I didn't even want to look at it. So I just cover all my P&L and just stick to the process. Kind of thing.
Right, because I think I talked about this in another video. It's like you can't be happy when you win $20. So,
Yeah.
Especially when you see like $300, $500, $3,000, P&Ls on Twitter and stuff. It's like, because you can't give yourself that reward. If you can't feel rewarded, how are you, like, the only way you need to reward yourself is looking at your chart and how sexy it is. And that's the difference between being process-based and being, I need to make money.
Yeah, exactly.
So Flash was like, so 2% was your max loss? Like, so every trade was 2% the max loss, or was 2% like the average trade?
Like 2% per trade, and when it hits like twice or like 3 times, I'm done. It's like my max loss per day.
Gotcha. It's a bit different. You technically have.
Yeah, it's all like different. Each of us how we manage that.
That's a good point, Joe. What was your initial capital, and what are the consistent strategies that got your accounts going? You don't have to answer the capital question if you don't want to. I mean, that's kind of.
No, that's fine. I did an IG live with Bao a few months ago, and one of the video as well. I started with $700, so.
Wow. That's
And then after the first video, I got to like 3,000, and then the second video I was like to 10,000, something like that, and
That's
yeah, it's
I couldn't
crazy.
I couldn't do that. I would go nuts. Good, like kudos. I mean, I probably get so addicted. Joe Kelly's like, I love a zombie breakdown. For what it's worth, based on data, average time of day of a zombie break is 11 a.m. Yeah, and you know, and I would be willing to bet, Joe. Like, I'm just gonna take a shot in the dark. It's normally the ones that have fallen so hard off of the high, and it cracks the death line, and you don't want to short it because it looks so low from the high, and you're like, oh, I can't short this one. Those are the ones that go down. Those, like, I guarantee Joe's collection, yeah, in Joe's collection of like his zombie breakdown, it's the ones where it's like straight up, straight down, and then it breaks the zombie, and then it's like, I can't short that one. Those are the ones that like go red. Like, anyway, so bottom fishing was, what was your average gain when you started with a $700 account? Just to put small gains into perspective for us.
Oh, $50 would be, you know, something huge for me. Or like $100, it's I would kill for it.
And you know, I talked to some people about this, like on phone calls, and I mean, like, if you're a server at a restaurant, I mean, $50 is like, I mean, $50 a day, and yeah, it's not a great day for a server, but I mean, it happens sometimes, and like, if you can make that in 15 minutes, like, that's honestly what you should be like really striving for, is like that process, that stress-free money where you just make like, you know, if you're about to go into serving a 4-hour serving shift and make like 50 or $100, if you can make like $50 in 15 minutes, I mean, you got to be, even though it's only $50 and you're seeing these big numbers on Twitter, like, I mean, you got to be able to reward yourself for that, I think. Like, those were big wins. Like,
yeah. I mean, the $50 is pretty big in my country because the minimum wage here is $4.
Mm.
Yeah, so it's over, you know, relative perspective.
Some people do
about it, yeah.
$100 a day too.
Yeah, if you could do that consistently, yeah.
So bottom fishing, were you taking $50 or less, or going for 100? So were you taking $50 or less, or going for $100 each trade? So what was the average share size? 250 shares, less than that, or like 500 to 1,000? Like, so basically, how are you making your $50? Were you making your $50 on like 1,000 shares and like scalping it, you know, for 5 cents, or?
No, you know, I had only like that time I was trading only like 100 and 200 shares, right? Sometimes it's just like one shot and one kill, so I had to aim for the bigger, you know, time frame or bigger profit. So usually it's like 2-to-1 or 3-to-1 kind of profit ratio.
Yeah, because it's very hard to go in 1,000 shares when you only have like $1,000 account.
Exactly.
Like, I mean, you're gonna run into capital problems. So scalping is almost more of a privilege of a slightly higher account. And the fees, right? Like, I mean, like, and just the risk that what if the trade? I mean, what if you had a teleport candle? You're done. Your account's gone. Like, I don't think you can do the 500 to 1,000.
Yeah, exactly. I mean, I was fortunate enough to not, you know, to be under PDT, because I was being able to trade with the $700, right? I got leverage like 4-to-1, so I got like 2,800, but only for the stocks that above $3.
Okay, so, and so let me ask, were you only shorting, or
yeah,
only shorting?
Like only shorting.
Okay.
I think I long like twice a year, or maybe 3 times a year, maybe something like that. But
yeah, you guys.
But I just started with, you know, with long, like Joe. So
I need to bring you guys over to the dark side. What were the initial strategies you stuck with? Sorry, you're getting hammered with all the questions today, buddy. What were the initial strategies you stuck with? What was the core?
like I just said, low hanger, and that time was low hanger and deadline strategy. I focus solely on those because like I have only one shot, one kill, right? And that trade had to work for me in order for me to grow that account. So I just can't afford to lose. So that's why.
Right.
Let,
And that low hanger probably had to be pretty sweet because you could just put basically you were doing what MIC teaches back then. Like you were just putting fantasy orders out, right?
yeah, exactly. That's what I did. Yeah.
Yeah. And you can do that. Like so, and the low hangers, they'll take 20, 30 cents for you, right? Because they'll like pop
Yep.
up and then get
Yep.
illiquid and then fall down, and you got yourself 30 cents on a couple hundred shares. That's $60. There's like your $60.
Yeah, exactly.
200.
Let me find. I have to hear still the calendar from January. I can show it to you.
200 shares, 30 cents, $60. Yeah. Oh wow.
Yeah,
Yeah.
that was
Is that
that
from?
was January, and
There we
here
go.
is the one from November. Man, this is like crazy.
Man, I haven't taken 7 trades in a day in like a long time.
Yeah, but the the good thing about TZ is if you trade at least 200 shares, like limit order, it's free for you. So it's pretty good.
How did you not drain your account with locates by mainly playing low hangers? They don't always pop. That's it.
Yeah, that time location was pretty cheap, not like now.
Now it's different. Now it's a lot more expensive.
Yeah, I paid like $3 or something like that for like 200 shares, and yeah, let me. I still have the. What was it?
Joe.
Damn it.
Uh,
Yeah, I have here. This is. I think it's a good point, for people to see as well. It's not about winning, but say I was like, up and then boom, right? That one day just wipes out everything, and then I was up again, and then that one day again, like over and over.
Yeah. And look at
And that time, yeah.
the 12 trades too. Like it's always and that you did at least half of those on the same ticker. So,
Yeah, it was like no hard stop, no daily max. It's just revenge, FOMO, everything, all combined together. It's like, and that day was I thought to myself, I could size up. Today is the day. I have to size up. Got big win. It's crazy.
and
Yeah.
you eventually just have to go like I'm not going for big wins anymore. It's like
Yeah.
and that's all I got. It like I like never look too big because then you're gonna get hit.
Yeah, exactly.
Tom, do you have any advice for staying patient and avoiding FOMO for your one shot? Or is the secret that there is no secret?
There's no secret, bro. It's just all about risk management. That's all, and that's what
There's no secret.
Yeah, that's like my kind of aha moment when I realized, after a big hit, right, you start, searching for questions or answers, like, what am I missing here? What's the edge? What's the secret sauce? Why, everyone else is banking and not me, right? And after a certain time, you realize that's it's not the case, but it's all about yourself and how you manage that. I mean, if you can see here, if I, manage that loss well, right, like to, I don't know, like 100 or 200, so I could save here, I don't know how much, like 1,300 already on that month. And it's huge, because after a big loss, it kind of struck with you. The confidence is gone, everything is gone, and it's just so hard to get back on, again, like you have to, you just lost like almost 1,000, right? And your average day is like what, like 1,500 bucks. It's just gonna take so much hard work for you to overcome that again, and to be able to be consistent again. And I think the most people, I think they should realize that the risk management is everything in this game. It's not about the setup or how you trade it. You could be up like 1,000 days for all I care, right? And then just one day wipes out everything. It just doesn't make sense. And
And
maybe not. Maybe you should consider not trading at all. And, find a real job or something. That way you could save more money.
right, and it's like when you do get beat down like that, like when your average day is like $100 and you just lose 1,000, the most demoralizing part is like knowing that it's gonna be so much hard work to make it back, and then like to avoid the temptation to try to shortcut. You can't shortcut back up. And
Yeah, I mean that's the most important part, because after a big losing day, right, the day after that is usually the worst, because
yeah,
you're trying to make all that profit back, and usually is end up blowing up the account the day after that.
yeah.
Yeah, so it's crazy.
Yeah, so we got to start winding this up. I know Tom's probably really tired. Let's see. Any other last questions? Or so less trades, more, or more trades with proven strategy better? Yeah, I would say more. Less is more, and you only
Less is more. Yeah,
the stuff you're good at, right? Like narrow it down. Trade the stuff you're good at.
exactly.
But yeah, guys, thanks for coming. A special thanks to Tom, man. So
Thanks for having me, bro.
thanks for coming on.
Thanks.
Thanks for being up at 2 a.m. to.
It's 3 now, so.
Okay. Well, cool.
Almost, yeah.
Like, send me a message over those fantasy orders. Send me a message, buddy, and we'll go over fantasy. Yeah, thanks.
Yeah. Thanks, guys.
Hey,
Have a good night.
yeah, thanks for coming on, Tom. You're the best.
Thanks, bro. Thanks for having me. All right. Good night, guys.
Good night. All right, let's see here. We're gonna stop the recording.